Want to understand options pricing? Watch this video. Now, I can't guarantee that by the end of this video that you will know everything that there is to know about options pricing, but my goal in this video is to get you to a place where you better understand the way options contracts moves, what kind of factors are really involved in the pricing of options contracts, and really get to a place where you are more intelligently picking your options contracts. So if that interests you, be sure to watch the end. And real quick, if you haven't already and are interested in getting up to 30 free stocks, as well as the 8.1 APY on all your uninvested cash, when you open and fund an account using the link down below in the description, be sure to check that out, because honestly, I've never seen them offer this much. So if you're thinking about it, the time is now. And now, without further ado, let's get to it. All right, so here we are in the Robinhood app. We're taking a look at the stock Apple. And in order to get to an option contract, we're going to go to trade option, and then I'm just going to pick a date. We might take a look at a few different dates just so you can see how these things differ that we're going to be paying attention to. So first, we're going to look at February the 7th. We're going to look at this 232.5 put, and where I'm clicking on this is I'm clicking about to the left where it says 232.5 put. And around where it says break even, I'm just clicking in that area with my thumb. And that gives you all this information. So if you really want to know what you're getting into before you buy an options contract, you will click on and take a look at this. So for me personally, there are going to be three things that I really want to pay attention to. Two down below that are the Greeks, and then kind of one thing up above, as well as one other thing on the other screen. So actually four things overall, but three on the screen. So the first thing that we're going to want to pay attention to, first off, is going to be the IV. Kind of below the ask on the right side of the screen where it says IV, we can see the IV is 29%. Honestly, when it comes to a certain number for the IV, some stocks will have different IVs normally, but what IV is implied volatility. Just know whenever this is higher than normal for the stock, you're paying a lot more for an option contract than you typically would. So if the stock does not move, contract is going to lose a lot of money. All right, so right here we can see the IV is 29.41. Let's just say this typically trades at 10% IV. This is going to be really expensive. If we see this anywhere around 70, you probably don't want to buy these contracts because it's expensive. We're going to go to Tesla real quick while we're talking about IV, just so you can see that it does differ. All right, so now we're looking at Tesla, and now you can see, looking at the IV, it's a lot higher. The IV is 60. That means that if this contract doesn't move, this contract is going to lose a lot more value. So when it comes to the IV, typically the higher I see the IV, the faster I'm likely to get in or out of a trade. And now that we're on Tesla, taking a look at Tesla, let's go down to the Greeks and pay attention to those other things that I said you want to pay attention to. All right, so first one is the delta, and then once again, the other is the theta. All right, so when it comes to understanding the delta, all right, you can see that it says 0.4731. All right, it says minus 0.4731. One thing to know about the delta, it's going to say minus if it's a put. It's going to be positive if it is a call. Just to show you real quick, notice the delta is negative 0.431 for the 377.5 put. But if we go to the 377.5 call, the delta is positive 0.5269. So I'm going to go back to the put, and going on, I wouldn't worry too much about whether it's negative or positive, but just know for every dollar, when it comes to the delta, every dollar that the stock moves, the delta is showing you about how much the contract is going to move. So for instance, Tesla is currently trading at 376.93. If Tesla goes up to 377.93, this contract, which is currently going for 62, since it's a put, it's going to go down by 47 0.31. So it's going to go down. The whole value of the contract is going to go down $47. Now, if Tesla goes down $1, it's going to go up $47. So this delta is how much you can expect the contract to increase or decrease every dollar of movement, whether it is favorable or unfavorable. And one other thing to know about the delta is typically the further out of the money it is, the lower the delta, and the deeper in the money it is, the higher. So taking a look at it, you can see we're kind of just inside the money. The delta is 47. If we go outside of the money, say we go down here to 365, the delta is 20. So that means if Tesla moves down $1, this contract will go up $20. If Tesla moves up $1, it'll go down $20. So that's how that works. And then say we go deeper in the money. Now the delta is 88. And that means for every dollar that Tesla goes up, this is going to go down $88. And every dollar that Tesla goes down, since this is a put, it is going to go up $88. So depending on where the strike price is in relevance to the stock price, that's going to affect the delta. The higher the delta, the better the move you're going to get on your contract. So the deeper in the money, the better the move you're going to get on the contract. But also just know it's going to be more expensive as well. Next thing we're going to take a look at is we're going to take a look at the theta. So taking a look at the theta, you can see it is minus 1.73. It's going to be minus whether you're buying a call or buying a put, because as time goes on, the contract is going to lose value to time, and that's what theta is. Theta is time decay. So the way to look at this is, say today is Thursday, market opens, theta is 173. Tomorrow the market opens, the contract is going to be $1.73 cheaper per share, or $173 cheaper, just assuming that the contract stays in the same price. If the contract moves further out of the money, it's going to go down even more. But just from me holding from today to tomorrow, this contract is going to lose $173, assuming that the stock doesn't move in favor. So personally for me, whenever I see the theta is high and I'm looking at holding from one day to the next, if the theta is high, I'll usually close out the contract for the day and maybe consider getting back in tomorrow. So for instance, looking at this theta right here, first thing I'm asking, if I'm holding this contract, am I willing to lose $173 if Tesla does not move? And for me personally, the answer would be no. So I would have closed this out before market close, and I wouldn't be in this contract. Now, if you're wondering how to get around theta being so high, there is something that you can do. So it's going to cost more money, but usually the more time you buy, the lower the theta. So if we look at, let's say the 380 put, see the theta is 172, but that's for February 17th. If we go out to February 14th, 380 put, theta is 69. If we go out to the 21st, same contract, theta is 48. Say we go out to January of next year, theta is 9 cents. So that's $9 a day that this contract's losing to time, as compared to the one that expires on Friday, losing $172. So when it comes to theta or time decay, having more time is much better than having less. And one other thing to know about time decay, the closer to expiration it gets, the higher the theta gets. So notice it was 9 a year out, and just a couple days out, it's 172. So that's something I definitely keep in mind when I'm trying to be responsible getting options contracts. I typically try to get at least 2 weeks. Majority of the time, even when I think it's only going to take a day or so. And the last thing I pay attention to whenever I'm buying my options contracts is going to be the break even. So if you look at the break even, this price only really applies to the expiration. So if we look at this 380 put right here, the break even is 372.57. We're looking at our February 7th expiration date. Break even is 372.57. So I know if Tesla falls to 372.57 and I bought this contract, I'm already at break even and I'm already profitable. If it gets there before break even, I'm very profitable on it. If it falls below break even, hey, I am extra profitable on it. But I always kind of keep that break even in mind, just to know if the worst case scenario happens and I end up having to hold it till the expiration, where do I need the stock price to be? Once again, let's take a look at some different dates. We'll look at the 380, see how it affects the break even. If we take a look, move out a week, the break even for that 380 drops to 366. The reason that break even changes is because the contract price gets more expensive. Say it goes out to February 21st, 363. Say we go out a year again. We would need Tesla to fall to 309 to break even. So there are benefits and drawbacks to getting more time. Usually the drawback is that it costs more money. But the good thing about having more time is just because you have more time does not mean you have to use it. Right now the contract's at $74.55. Let's say the price of Tesla falls $10 and I want to sell this contract. If we click on the contract, you can see the delta is about 37. So if Tesla falls $10, that's going to be about $370 that this contract gains, and I can sell the contract and lock in $370 profit, even though I didn't hold it to break even. Honestly, that may have been a lot to take in. Don't hesitate to save this video so that you can come back to it later. I personally tend to notice that whenever I review things over and over and over again, things tend to click. So if you're like me and you didn't fully grasp it, hey, be sure to save this video so you can come back to it later. If you learned anything or found this video to be helpful, be sure to smash the like button. If for some reason you made it this far and haven't already, be sure to subscribe. And last, but certainly not least, thank you so much for watching. Manuel signing off, and I want to change your life.